Hello there, Maverick Traders. This is Robb Reinhold, and it's another Friday. Here is the trading room. Let's get into it. In this session, we're going to go over the previous week. We had a pretty big move on Thursday we're going to talk about. We're going to look at the market with a fresh set of eyes and say, did anything change? We had lots of news, lots of volatility, but did anything change technically? And then we're going to go through all the sectors, and we're going to have some trades, some bulls, some bears. Actually, no sideways this week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
Let's start off looking at the news last week. And we had just one big bit of news this week. We had this day on Thursday, and we'll take a look at all the charts here in just a second. But Thursday gapped up 1%, and by the end of the day, everything was down 1.5%. It was the largest loss since last March. So we had a huge reversal. And look, news always is looking for a reason why it happened. Sometimes pullbacks happen. We had gone for, I want to say like 5 months without a 2% pullback. That's a really strong market. It was likely to happen at some point. It just happened on Thursday. Now, yes, the news always says this is why it happened. One of the Fed governors came out and said, hey, if inflation stays what he called sticky, there may be 0 rate hikes this year. Maybe that spooked the market, but it just caused a cascade effect. Like I said, maybe just a couple players got together and sold a lot. That's what happened. We had a big reversal day, and then Friday, guess what? The market stabilized because we got some good economic data. We're going to talk about that in a sec. I'm also going to go show you a chart of gold and oil have been really, really strong. It's been the two sectors we've been talking about. The materials and energy sector absolutely are fantastic at the moment. Let's start off on Monday. We got ISM was better than expected. Now, this is the first time this number's been above 50 in a long time. And then on Wednesday, we got services PMI, which has been strong. It actually was a little weaker than expected. So a little bit mixed here. But on Friday, we got this report, and this was a good, solid report. 303,000 jobs, 0.3 wage growth, 3.8, the unemployment rate went down. That spooked the market at first. What we saw right after this bond yield spiked, the dollar spiked, equities softened from where they were pre-market. And then it was like right around like 10:15, those bond yields came down significantly, and the stock market rallied from then on through the rest of the day. And by the end of the week was actually not all that bad. Yes, the Dow and the Russell 2000 looked ugly, but outside of that, you would not even blink twice about, oh, the market was down 0.95 for the week. Not a big deal. What's everyone getting so excited about? Take a look at oil and gold. A huge, huge move, especially in gold. Oil can go up and down 4, 5, 6, 7% in a week. That's no problem. But gold typically does not gain 4% a week. That is a massive, massive break in gold, and I've got a chart for you just to show to you. But let's take a look at the S&P. All right, so here we are. Now, I don't want to downplay or ignore Thursday's candle because it's very easy in hindsight to say, oh, we knew that wasn't anything big. I was getting calls on Thursday after the market closed. I was getting calls from traders, and I was also getting calls from neighbors saying, Rob, is this the end? Is this the end of this run? I did the end of day video on Thursday, and I said, look, I know it's dramatic. These kind of days, they come with a lot of emotion, but let's see what happens. I said, yes, we are down below our 20-day moving average for the first time in a while, but let's see what happens on Friday. And you can see Friday's candle, we're right back above the 20-day a little bit. So ultimately, this is still more of a base than anything. And frankly, I'm more bullish because of this day than I was back here. Let me tell you why. One of the things that happens in a bull market is you get the bears and the naysayers, and they're constantly fighting against it. And when you get days like this, they all come out of the woodworks and they put them on CNBC and they're like, yep, this is what we're talking about. This is the end. and then they get hosed. They're wrong. At some point, they will capitulate. When they capitulate, that is the end of the bull market. When they finally say, well, we're going to get in now, we've waited so long, but things are finally now looking good, that's kind of the end part of the bull market. So the fact that we got this ugly day where all the bears were all cheering says, yes, we knew it was over, to get a reversal that next day kind of tells me that there's still some more short covering that's likely going to push this higher. We take a look at the NASDAQ, it's even worse. The NASDAQ came all the way down to that 50-day moving average. It hasn't been down there for a long time. I am not as optimistic about this bounce. That bounce is, I don't like that long upper shadow there. We faded at the end of it, but at least for now, we are still in bullish territory. S&P, much more so than the NASDAQ. So I'm going to give the S&P a +2, and the NASDAQ gets a 0. NASDAQ gets a 0 for me as far as direction goes. Take a look at this breakout in gold. We've really liked the materials sector, and the gold market has been absolutely fantastic. I mean, this is just a beautiful breakout. Would I buy it here? No. Would I buy it on a pullback base? Absolutely. This is where a lot of money is going at the moment. So let's talk about this week. We had a nice recovery. I am more bullish now because of Thursday than I was 2 weeks ago. Because again, anyone who was short, they're going to see that day, and with a move up on Monday or Tuesday, they're going to say, you know what, we can't fight it anymore. That possibly could lead to new bullishness. Remember, when the ultra bears finally give in, it's probably closer to the end than the beginning. I've said this for a while, and I've left this up. We're in the later stages of a bullish move. Enjoy it. Enjoy it. Get on the long side. We have no idea how long it's going to last. It could last another week. It could be over. That could have been it. Could last another week, another month. We don't know, but enjoy it. These runs, you can make a lot of money. Like, we've been doing really good in the trading collective. We're up 10% for the year and risking no more than like 15 to 20% of our capital. It's been a really good move so far. Let's talk about this week. We expect there to be a bullish bias to the markets. We do have 2 big reports here, really one big report and then one after the CPI. CPI is on Wednesday. We don't expect there to be a ton of buying on Monday and Tuesday. I think people are looking to keep their powder dry. On Wednesday, this could be the catalyst. If the numbers come out as expected, I expect the market to mostly be sideways. If these numbers, let's say that the headline number or the core number comes out at 0.2, the market is going to love that, because right now the market is doubting that they're going to get their 3 rate cuts that they want. If this number comes down to 0.2, I'm telling you, it's on. People are going to say, yes, we are getting those rate cuts. Bond yields are going to come down. Dollar is going to weaken. It's going to be very, very bullish for stocks. Now, do I think that's likely to happen? No, because all the other inflation data has kind of gotten a little hotter than the expectations. I think this comes in at 0.3. Maybe even one of them comes in at 0.4. And it might disappoint the market a little bit. But I still think we're about a month or 2 off from getting better inflation numbers. Core PI comes out on Thursday. I think all the action is going to be done on Wednesday. And that's really about it for the week. We have moved down our technical score. Remember, we are all about technicals, not about our biases or opinions. The market is no longer above the 20 MA. It is at the 20 MA. So that goes to a 0. So right now we have a +2 market. I'm giving it a +1 for the week. I think we get a bullish bias. We could be in this little base here for a while. But look, +2, +3, it's still a bullish outlook on markets. Let's jump into the sectors and let's score all of them from +3 to -3 to find out where we're going to be focusing our trades. I've been saying for about 2 or 3 weeks here that I like the energy sector the best, and boom, you can see it was up like 3% last week, up another 3%. I also like materials. Materials lagged a bit, just a bit. But let's really focus on where the laggards are. Real estate, healthcare. Both of these are going to get a downgrade. Consumer was also weak, along with tech and financials. Everything else was fairly flat on the week. Let's take a look at them one by one. Let's give them all a score. Last week, utilities was a +3, and it's going to hold on to its +3. Look, it had a little pullback, nothing big, pulled back to the 20-day moving average, and gave us a nice little bounce here. So it maintains above the 20-day moving average, so it's going to keep its +3. Comm services really tried to break out, was ready to go on Thursday. Look at that, ready to go, slapped back down, but recovered. Still above the 20, still above the 50, so it's going to keep its +3. Real estate was one of our weaker sectors last week. I think we were at a +1, and now it's at a -1. It weakened significantly. We are now trading below moving averages, -1 on real estate. This was the big move. This was the big move. Here is what the candle was last Friday. This was the candle. And this was sloping up, and I was like, hey, you know what? We actually upgraded this to a +3 in healthcare. There were some big healthcare companies that took a beating, and they're mostly the healthcare providers. I mean, the healthcare plan providers, like United Health, they took a beating. And this went from a +3 to a -2. I can't remember the last time we had such a drastic move in a sector, but here we go, +3 to a -2. I know I had added on a bullish trade in healthcare. Luckily, the trade actually ended up flat for the week, so it avoided the carnage. But look, the sector as a whole got a downgrade. Utilities was at a +3, and it's going to stay at a +3. Nice looking base here. Nice looking base. No reason at all to be worried about it. Staying above that 20. We could see breakout on this one next week. Financials is going to get a downgrade. We are trading at the 20-day moving average. So take a look at the two differences between industrials and financials. They were both high basing, but financials came down all the way back down to its 20. Industrials did not, so it's going to get a little downgrade to a +2. Consumer went from a +1 to a -1. Consumer did not do well, did not hold up. And take a look at Friday's candle. Take a look where it closed in relation to Thursday's low. It's down at like the 75% mark. All the other ones we're looking at close at like at least the 50, if not the 75% on the upside. This is lagging, definitely -1 on consumer. Tech, that candle on Thursday is just crazy in tech. That is just a crazy candle. You can see we recovered about half of it. It's at a 0. It's between moving averages. They flattened out. That's just a flat out 0 with technical scores. But you come over here, materials did great. Materials did fantastic. They maintained their +3. Energy just crushed it. It maintains a +3. Here's where we were last week. Our +3s that downgraded are healthcare and financials. Financials just one notch. Healthcare obliterated. And then take a look at our weak sectors we had. Technology, consumer, real estate. We said these are the weakest sectors. They all weakened this week. That's why we do this relative strength and weakness. It's telling you where's the money going and where's the money not going. Where's the money coming out of? And the 3 weakest sectors all had negative weeks this week, whereas some of the strongest sectors had positive weeks. So this is the board here. Healthcare looking the weakest, consumer, real estate, tech. I think you can look in all of those sectors for some shorts. Utilities, comm services, energy, industrials, materials continues to be the place to be. So let's take that information and let's go out and look for some possible trades in those sectors.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, Click apply at the end screen or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
We're going to start off with Comm Services. Comm Services is a +3. It was ready to break out on Thursday, got hit back down, but it's still in a very nice place. So we want to be long, we want to be bullish here in this sector. Came across this 10-cent music. Now this is kind of an interesting trade because this is a Chinese company. And if you take a look around, Chinese companies are not doing all that great at the moment. 10 cent says, you know what? I'm doing just fine. Just a beautiful pattern here. We break out, make new highs, we pull back, and you can see we have churned here. We have churned and churned and churned, but I want you to take a look at Thursday's candle. Wasn't a disaster like most stocks. Friday's candle, big up day closing at the highs. So there's still more buyers and sellers on Friday when they close the market. I don't see any reason why this one doesn't break out and make a new high with this run. I'm looking at 12.50 as a target. This has dollar strikes, so I think you've got to go out to the 11.12. I think that's about as far as you can go here because this only has monthly options expiration. So you have to either choose 2 weeks or 6 weeks. And if you're choosing 2 weeks, I don't want to go up to that 13. In fact, I looked at the options and there were no value to the 13 calls, which tells you that there's very little likelihood that it gets up there. So you're going to have to go with an 11-12 bull call spread. It's going to be about 65 cents. This is going to be a positive theta trade, meaning you're going to get some delta and you're going to get some time decay. If you don't like that trade, then the only other trade you can do is the diagonal, in my opinion. So you'll go out to the May, but you'll sell the 2 week away call, the 19th. Do the 10-12. So you're right there at 12. If the thing takes off and runs, hey, you've got a nice gain for 2 weeks. If it hangs out around 12, you've got all the way into May to hold on to that $10 call. All right, let's go next into healthcare. As I said, healthcare is a sector you can be short in. And here we have Teladoc. Teladoc has been in a very long low base. As you can see, it's been doing that for a while. Look, the market's been bullish for a while on Teladoc. The best it can do is not go down. The second the market gets a little bit of weakness, it breaks. However, there was some news on Friday, and I do want to talk about this, that the CEO abruptly stepped down. And it looks like right now there is some enthusiasm for the CEO stepping down. Now, these type of news events, they can absolutely have an effect on the stock short term. Here's the problem. This is a business that is in trouble. Look at the chart. It's not growing around with the rest of the market. It's in trouble. It could bounce up for another day or two. I have no idea. But if you give this enough time, this thing is going to be moving lower, most likely. Speaking of time, there are weekly options on this, so you have lots of choices of your time frame. I'm going to be looking at either the 2 week out 14-15 bear put spread, or if I want to go a little bit bearish, more bearish, I'm going to give myself some more time, give myself 3 weeks. You could even go into May and give yourself 4 weeks and go all the way down to this 13 all the way down here. If you don't want to be all that bullish, this is a really wimpy trade. It's a 14-15. So you can see it's right in the center. It's going to be 50-50, 1-to-1. So you're going to pay 50 cents for it, and you'll make 50 cents if it drops below 14. You want to get a little bit more bearish, give yourself more time, and go the 13-15. And if it can drop down into there, that'll be a very nice risk reward on Teladoc. Next up, industrials. This has been a sector I have just really liked. It's cooled off a bit, and by cooling off, it's based. It hasn't gone down, it's just based. As it continues to base, it's just building more energy. I like this to the upside, so I said I want to find a trade in this one on the long side, and here is PACCAR. PACCAR is auto parts, does auto parts. Take a look at this, just a beautiful, beautiful chart. We got a base, breakout. Looked like we were having a base for a little bit, but then this week got weak. Bounced on Wednesday, but take a look at Thursday's candle. Hey, that's wonderful. This didn't give up everything it gained on Wednesday, and it closed substantially higher than where it was on Thursday. This one to me looks like that pullback, and this is why I say I'm more bullish now than I was 2 weeks ago, because these pullbacks draw energy into the markets. When it's basing, it's kind of building. But you get these pullbacks and these big moves where people panic and jump out, and then new people rush in. All of a sudden, it's like, oh, I'm missing the boat. Here, people don't feel like they're missing the boat. Down here, they do. So I like this one to the upside. The only question is when to play it. This one only has monthlies, so you basically either need to play 2 weeks out or 6 weeks out, or use a diagonal to do both, which I think is a great trade. 120, 125. As you can see, not really asking a lot. I really like this diagonal here. Basically, you're saying, okay, I got 2 weeks. If it runs a ton above 125, I'm going to lose a little bit of gain, but not much. Just a little bit. That's how diagonals work. If it hangs out at 125 on April 19th, I can just let that expire, and now I'm in long calls, and if it breaks out and runs, that's a beautiful trade. Now I'm just in long calls at that point, and I've brought in some premium to offset some of my costs. Consumer is another sector I still like short. I've liked it short for a couple weeks here. I still like it short. And you know what? We did a trade on Tesla a couple of weeks ago, right when it broke down here. It was a beautiful trade, max gain. It's bounced back since then. Here we are again. Now look, I've said this before, and I'm going to say it again every single time I trade a Tesla or a Microsoft or a Nvidia. I don't go looking for them. And one of the things I don't like to see, and I know I'm going to be stepping on some of the toes of my traders here, but they need to be stepped on. I can't stand it when I see traders that are only playing Tesla, Nvidia, Microsoft. Look, they're not even going out to the market to see what's the best. They're just going out to look at these stocks, totally ignoring all the other wonderful, wonderful charts, easier charts to trade. But when it comes up on my scanner, and it legitimately is the best one, I always double check, and I'm saying, look, am I doing this because I have some alliance to Tesla, or I hate Tesla or something? And as long as I can answer that and say, no, this is truly the best setup I found in the sector, you can trade Tesla. But I always get a little paranoid that, am I picking this just because it's a, quote, popular stock and everyone's trading it? And this time, again, you always have to look at your biases. Sometimes they're very difficult to see. I think this is the best trade in the consumer sector. So looking just at some really easy levels, this first one, 160, 165. I think that's a fairly easy trade. If you want to get more bearish, or if you want to get less bearish, this 167, 162.50, that's even less bearish here. If you want to put the gas down, the 155, 150 or 165 to me looks the best here on Tesla. This one, it just does not look good. It continues to fall lower despite what the market does. All right, and last, I've got a trade in the materials sector, and it's in gold. This trade looks really great. As you can see, we got a nice high and tight base. These are called high and tight bases. And these are called high and tight bases by me. This is what I've always referred to them as. I used to hate these because I always wanted to get pullbacks. I always wanted to get deals on stocks. And I hated it when there was something I really loved and it ran up, and then it did this thing where it didn't really pull back. And I was waiting for it to get back down to the 20-day moving average because I wanted a good deal on it. I wanted to get it at a moving average. And then it just took off and run. Most of the time, you get 5 candles in these. I don't know why, but most of the time, it's about 5 candles. Take a look at where we close on Friday. We cleared out of that little range. I see no reason for this not to run higher. The sector's good. The market's good. Everything looks good. This one only has monthlies as well, so going out to the April 19th, 60, 65. The stock's right at 62, so there's going to be right around 45 delta, 44 delta, so you're going to get, a little bit of a risk reward boost. Just a solid trade. Anyone looking to do diagonal, same strikes here on this. All right, one other little matter of business. Well, two matters of business. If you have trades you want to share, jump in, go to the Maverick forum, log into the members area. We always love to see the chatter between our traders. One thing I do want to bring up is we do have a trader that has gone out and set up a Discord chat room. Look, I am 100% against chat rooms. And I talked to this trader and we had this really great discussion. And over the years, there's always been a very recurring request of, hey, Rob, is there a Maverick chat room? And my answer is always, no, there isn't. And here's why. First off, a chat room breeds over trading. If you're constantly chatting about trades, guess what you're probably going to be doing? Getting in more trades than you should. So number one, it doesn't do you any good because all it does is get you thinking about how many more trades you can make, not how many better trades you can make or how you can make your trades better, but it's just about more. Number two, if you get a strong personality in there and a weak personality, the strong personality can convince the weak personality to follow them. You don't really know what this person is doing. You really don't know if they're a good trader. You know what they've told you. It's just a dangerous thing. So we've always said no to a chat room for those reasons, but I know people want it. So I said, look, go ahead, open it up. If you want, you can go onto the forum and you can make an invitation to any other trader who wants to join. If they want to join, that's fine. This is not a Maverick sponsored thing, but we always like our traders to be able to get together and work together as safely as possible. So if that's something you would like to take advantage of, also on the forum, there should be an invitation to how to get onto that Discord server. Understand it is not run by us. It's not moderated by us. So enjoy if that's what you're looking for. Let's go ahead and wrap this up. I am more bullish today than I was 2 weeks ago. These panics, these spikes in volatility and these panics and people on CNBC freaking out, they create energy. When we had a market that was just drifting sideways and one day up, one day down, there's no energy there. But we get one of these freak out days, we get a pop back, all of a sudden people are re-energized. I think this market is likely just to continue to move higher. It's not going to be at the pace that it was in November, December, January. We're now more mature here. It's going to be more still of a grind. But again, I just don't see anything technically that's telling me to stop being bullish. We have downgraded from a +3 to a +2, so we will go less bullish because of that score. But everything still looks really good here. That is it for me. Thanks for joining me. Everyone have a great weekend. Goodbye, everyone.